I got the TTs on.
Are we open? All right, cool.
Yes, sir.
Back to the week open price. Gone fucking nowhere since Sunday.
Sunday.
I mean, that's where we are. I don't know. No, it's kind of the same. Actually, below weekly price in Nasdaq. Week open. Never marked my Nasdaq up. Got lazy. Oh yeah.
Lazy.
Somehow we just keep. We're putting so much weight on August 5th, 2024. But that's our reference.
Mm.
We're building something that can handle that.
Okay, you gotcha. 7.
All right. Week open. Thanks. London, what, matched yesterday? This is yesterday morning. No, Friday morning session. Like, to the fucking tit. To the teats. Right on the teats.
You like ES. ES. Wow. We're going nowhere.
All right, let's just say Clyde put a sheet together for me here, everything we've been working on.
A sheet? It took a sheet?
Yeah. I'm going to go put a sheet together, honey. In the bathroom. Turn the fan on.
Let's see. On my live stream, I should start like doing like entertainment shit because we suck at trading.
I'm sorry, say that again. What did you say?
Oh, I was just babbling. What am I trying to say? I should just start doing like entertainment stuff, like juggling or something, because I suck at trading, and so who's gonna want to watch me? You know?
You suck at trading? You're killing it. What are you talking about? You always get it right, like every fucking day. You know what you're looking for.
Every day. Every
fucking day. You know.
Yeah, I got my charts all marked out. You know.
Hey, okay, let's 5 times 25 cents. What? Wait, no, 3. Sorry, that'd be 75 cents. But hold on, 3 times 75 times 50. 75 cents times 50.
You're a mechanical engineer, bro.
No, not at all. That's not true. Let's see, 70. Yeah. So, what? Yes, that's correct. Oh, that's not correct. It's $37. Okay, gotcha. Well. Okay, let's do this then. Where you at? From and send. Oh, fucking commissions, bro. Wow. Yeah, I see ya. Got him. Okay. So, man, we're building a fairly complicated structure.
Price loses. $29, $28, $46. Yeah. Looks like today I will not be trading. View your channel. I'm going to see if my chat box is working today. Yep. We're in the middle of the range, dude. Middle of the range.
Yes, sorry. I'm a bad partner here. I'm still reading.
Maybe I should reach out to Tanja and see if she wants to collaborate.
You should.
I should, man.
You guys would be good for each other.
What is that supposed to mean? The way you said it is more concerning.
Whatever. Okay. Let's see. I don't understand. What did we just figure out here? Oh, I see. And so that's the biggest fucking crazy thing about this whole crazy thing. Yeah, buddy, yeah. I'm gonna try to do it. Fuck it. We're gonna try to hold. We got thing, man. We got thing now. I'm gonna be holding at any given time 15 long puts. I will have a micro sell ladder, very similar to when shit went crazy and it was going down, those triggers where it was pushing the market even further because it was automatic.
Yeah.
These are going to be in place. Same thing. They're sell stop orders. So I'll be adding short micros to hedge the delta as we fall. 15 puts costing me about $9,000 a year in insurance.
Jesus.
Being held at all times, carry the biggest volatility hedge.
Damn, dude. Damn.
And in delta, if all things fail and we're moving too far low, there's also an exit program for each one of those. Oh my goodness. I need to get it where it's written out. Oh. And then I need to keep testing it every fucking week. Sure, I can run it every day, I guess.
Dang, every day.
Yeah, just rerun the stress test every day.
Did you mention if you were ever gonna? Do you ever get to a point where you're not having to carry so much insurance? I don't know how that would work.
No, I'm gonna have to spend upwards of $16,000 a year in insurance for the one day. Because it's the one day that destroys your account.
So, okay, I
know you haven't done the work, and I know what you're getting at. You're like, well, just minimize, but it doesn't work that way.
It doesn't. It's still
no. Okay, so do the math on that. To minimize, if right now I'm at a 90,000. Let's just round it, 90,000 a year theta. Okay. 90,000.
Okay.
So if I want to reduce risk, say I have no tail insurance.
Okay.
I want to reduce risk by what? To match up what my insurance is going to cost me, $16,000. So to reduce that, it's not much. In fact, I'm not even sure you could correctly do that in a contract.
Yeah.
Because if I'm in one, I got like 2 contracts. So essentially, if I try to reduce contract, I'm going to be cutting 50%. There's first problem number 1. But let's just say that I could cut by that.
Okay.
Okay. Let's say that I figured out a way I could cut down just that much and not have any insurance that I'm paying for, correct?
Okay.
You follow?
Yeah. Yeah.
It would make no dent, hardly any dent at all in the Vega problem.
Yeah.
See my point?
Yeah, absolutely.
My Vega problem still exists huge because I don't have anything out there. All naked puts, I'm making slightly less a year. When you say 16,000, you're just a grand, a little over $1,000 a month.
Yeah.
You know what I mean?
Yeah, sure. Absolutely.
I'm reducing my theta per day by like $40.
What are your projected profits? Like what are you thinking that you can make then at your current level right now?
Well, we're not built up yet, but in the next 60 days, we'll be at a 90,000 a year program. But I'm going to be spending at that moment 16,000 a year on the insurance to cover that.
Okay, so you're gonna make
74,000.
I was about to ask that. You're gonna make 90 but lose 16.
Correct. In a crash, I have done more than 50% reduction in volatility hit.
Interesting.
Okay, so you could reduce. You see what I'm getting at?
Yeah, absolutely.
That's why I don't want to hear the argument. We'll just go smaller.
Yeah.
My idea is, I get that. That's easy.
Mm-hmm.
And if I was lazy, that's what I would do. I would just have to go smaller.
Yeah.
But I'm putting hours and hours of work in to create something that costs me, 12% for a 50% reduction. See what I mean?
Yeah, absolutely.
That's scalable.
Makes sense.
Imagine that.
Yeah,
That's
makes
totally
sense.
Scalable.
It makes sense. The numbers fucking make sense.
Well, and the biggest caveat, biggest problem with this is that we're talking about the voodoo Greek. We're talking about the volatility Greek.
There's no rhyme or reason.
There's no real linear math per strike per series. Imagine the number of strikes inside each series.
Yeah.
And then imagine all the series in an option chain. Hundreds.
Yeah.
Thousands.
Thousands, actually.
Fucking available strikes, all having their own Vega and implied volatility attached to them.
Mm-hmm.
And in a normal scenario, the numbers make sense. Like they scale in a way that stays pretty consistent. In Volmageddon, we don't know exactly how everything works. We have a theory on it. We have data, historical data. We have as much as we can fucking get. But in the moment, we don't exactly know how 3 days out or 7 days out or a 45-day or a 300-day naked option is going to perform. Like I said, we have theory and understanding
Sure.
how it's supposed to do it, but it is not so linear like price. Like price, it's $50 per point. And yes, that you can calculate, and it's the same every fucking day.
Yeah.
Right. But with volatility and the VIX, and you got a 3-month VIX and a 6-month VIX. You got the spot VIX. You got futures VIX and the options market on the VIX. But then you have, how does it affect? What series are we actually is getting affected and what's not?
And so your 12% that you're paying is reducing Vega by 50%.
Exactly.
That's
why it's worth it.
On the way down, essentially.
Well, careful, because we're having to separate Delta and Vega, because Delta, we can't depend on our Vega hedge
Oh.
To take care of delta.
Yeah.
August 5th was a 300-point move down.
Yeah.
It's fucking nothing.
Yeah.
So all of those hedges would be completely worthless. I would get a 300-point hit.
Yeah.
Right?
Yeah.
And nothing happened. That's why we went to the micro. The micro, because I just told you, it's like a linear. When I sell one micro, I offset 5 deltas. Think about that. My whole portfolio is positive 5 deltas right now. That's it. One micro.
That's interesting.
So I'm pretty flat. And so when we can calculate this, when gamma gets us into a positive 10 delta, you buy a micro or you sell a micro.
You sell a micro.
It reduces your portfolio back down to 5.
Huh.
Okay.
Okay.
When it reaches that 10 again with the short micro, you sell another one.
That's interesting.
So
okay.
That's my gamma play. And they're all going to be, that'll happen overnight because we predetermine with gamma, we predetermine where our deltas are going to hit positive 10. And we put out stop loss orders. So I've already got 3 of them out, all the way down to 73 something.
Dang,
73, 40. So they're in there to catch that delta.
Yeah.
But they do nothing for volatility, of course, right? So,
dang, dude.
You get,
I would like to.
You know what's.
Go ahead. No, go ahead.
The crazy part about the August 5th problem is Sunday night, we gapped so huge, the slippage was so bad on your first delta, the first micro, that at the end of the close on Monday, I was down $400 on it. It did nothing for me on that day. And I mean, in that specific scenario.
Yeah.
And Claude can catch that. Claude found that fast. That would be difficult for me to figure out. It'd take me a while. Claude's like, well, this is what actually happened. You didn't make anything on your micro. But your volatility was this bad. So that's why we've trying to separate the two.
See, dude, Claude isn't that bad after all.
I know. You realize how many hours? Probably 15, 20 hours in. It's fucking nuts. So, anyway, that's the biggest problem with this and scaling too hard is the not knowing exactly how.
Yeah. Yep.
The pricing will work, and we're basing it on that they will work. And the worst thing that could happen is that it doesn't do shit.
Doesn't do anything.
Yeah. But again, there's term volatility, and that's the other thing you have to understand is that the spot VIX, when it gets hit like it did, that's your 30-day. That's your 30-day and under expirations. And so we went back to the 6-month futures VIX historical chart. And that jump that went from the high 20s to a 65 on the 6-month was a 12-point hit.
Jeez, dude.
Vega and implied volatility did not rise by that much on those contracts. The gamma is really flat when you're 300 days out.
God dang.
And it's actually called VOLMA. Have you ever heard of VOLMA?
No.
It's volatility's gamma. It's a whole new fucking. It's not even in Greek.
What? Say that again. It's volatility's gamma.
Sexual organ. VOLMA.
Yeah.
VOLMA. People call it VOLMA. It's not a technical thing but it's gamma in Vega. And so the VOLMA 300 days out is way different than 14 days
It's
out.
volatility's gamma. That's interesting.
Yeah, volatility has the gamma to it.
That makes sense. VOLMA, volatility, gamma, VOLMA.
I like that word, huh?
vulva. It's the word of the day today.
Careful, it sounds like vulva.
Careful.
Yes, sir. So, am I educating you?
That's pretty interesting, dude. Yeah, absolutely.
Crazy shit. So we still just don't know.
I'm telling you, dude, there's not a person.
100%.
I believe there's very, very, very few people that know more than you do when it comes to options. Very few people.
I still have too much. What would be the, what would you call it?
Why isn't
High hopes? That would be the only difference. Man, Dow Jones and Russell are not too happy today. Might be telling you something.
Yeah. They are going the opposite direction. 25. Yeah, dude, we're not going anywhere. I'm gonna shoot my shot at Tanja, bro.
You're gonna do what?
I'm gonna shoot my shot at Tanja.
Dude, careful, you might get banned from YouTube.
Why? Oh, I didn't mean it like that.
It's nasty. Let me know before I'm gonna go ahead and hang up.
No. Let's see.
Sick.
Sick.
Pervert.
No, it's not like that.
I really don't understand what you mean.
I'm gonna reach out to her, man.
Oh. Wow, there's a better way to say that.
What do you mean, dude?
Don't say shoot your shot.
Let's see. Why am I getting notifications? Is FBI coming? No.
Okay. Close this link.
Nothing, man. Nothing. What about Tyler?
What, you reach out and say hi? Hi, Tanja.
Hi, Tanja.
Nice shirt.
Hi, nice shirt. At least I didn't say I was going to reach out to Tyler and say, hey, nice shirt. None of them are doing anything, dude. None of them.
Yeah, I mean, I just keep looking over. Nothing. Just kind of show like he wants to be short here, but.
I should start wearing a hat backwards like Tyler so nobody sees my receding hairline. Man. Nothing happening. What am I going to do?
close today. All right. Here we go. Starting to break. Five-minute, definitely looking shorter. Break towards London low. Anything?
Yeah. I think I need to correct my my time zones. What are they? Session zones? Like London, C. Okay, London is actually no. London is not correct. London is from midnight to 3, right?
Mm-hmm.
Kill zone.
Interesting. I stand corrected. Be 16,000 a year at the moment. In prediction, maybe let's say at best, hedges 100%. Huh.
It hedges 100%.
Well, and it has a lot to do with the fact that my one of my best paying is far out in time.
Oh.
Thus does not react the same.
Okay.
Right?
Yeah.
So this is quite the report. So actually, I'd be down 25% on the account in that scenario across all, what I've got, 25%. But with the different layers of hedges, there's 3 different layers, with a 4th layer being like the exit strategy. The hedges saves from 25 down to a 1% down.
Dang, dude. Okay.
So the thing, even if that was half off,
yeah,
it's still huge. And unless there's something real, and that's the other thing, I got to go figure out span margin requirement. So the last thing I want to do is, once this is put together, I actually want to send it to the desk at Schwab and see if I can get their opinion on that. See if they'd help me. I'd be taking a lot of their time, but you know what I mean? Send them basically my report and say, does this stress test I put together line up with how they see it?
That's interesting.
I'm trying to save my ass here. I think this is necessary.
Yeah. Heck yeah, dude. That's your life's work, I feel like, dude.
Yeah, I've been through this once already.
What do you mean?
Well, I did it.
A lot of hurt.
Lazy. I was fucking lazy, and I was just, you know what I mean?
A lot of hurt.
Oh my god. Yeah.
A lot of hurt.
Yeah, I had too much. Too much. So.
This is where Sir Pickle would say, go live your life. and have some motivational saying in the caption.
Don't forget to take your shirt off.
Oh, yeah, I need to take my shirt off, yeah. Sir Jalapeno. Sir Jalapeno.
Yeah, I got to get with Schwab and figure out their span margins and what they want to see. The thing is, though, okay, I'm short 13 right now, and we're going to hold 15 against it. In fact, 17 against it at all times. So I have a feeling that my hedge, I'm going to be locked in. I mean, technically, on the portfolio, will be balanced. Shit, it's my boss. I'll call you back.
All right. I don't have a trade today. Don't have any intentions of really trading today. August just has been really crappy price action wise. And I don't really have, I don't have a trade. It's got to go down to 28,946, yesterday's low, before I engage into shorts. And I know it's only 30 minutes after the opening bell, but I might just cut the stream. I don't want to waste anybody's time. Let's see what Tanja and Tyler are up to. Nothing. It's going lower. Alrighty, I'm gonna cut the stream. I just don't want to be on here and wasting anybody's time. Thank you for watching. Anybody that's been out there watching or watching in the future, I appreciate the support. See you guys here on the next trading video. Hoping it's a green one. See you guys later.